What up, Hyperchange? Welcome to another episode. It's that time of year again. Tesla just reported its Q4 2017 earnings after the bell. We're gonna go over it, start with a bunch of charts, going through the financials, and then I'm gonna break down the entire conference call. Let's do this. So the first and most important number I was looking for was the guidance of how many vehicles Tesla would be producing in 2018. Now they guided they would sell about 100,000 Model S and X units, which is about exactly the same amount they sold last year. They were a little bit production constrained on this based on 560 battery types. We'll get into that later. And they didn't give any specific guidance on the amount of Model 3s that they plan to deliver, but reiterated the guidance that they want to be producing 2,500 units per week by the end of Q1 and 5,000 by the end of Q2. Based on extrapolating those numbers, I think that means Tesla can deliver about 200,000 Model 3s this year. So I'm still looking at about deliveries of 300,000 units total in 2018. In terms of the actual financials, Tesla reported revenue of $3.3 billion. This is a quarterly record for the company, up from $2.3 billion just a year before, a 44% increase. However, the company's gross profit was flat and the operating loss more than doubled. We're gonna get into that a little bit more later. Now, taking a step back on the annual basis, you can see Tesla had a monster year in terms of revenue with a record $11.8 billion. This was up 68%. Not all of this was organic growth because they acquired SolarCity late in 2016, but the bulk of it was. Another thing to note is Tesla's losses continue to grow, a record operating loss of negative $1.6 billion in the quarter. Why is this happening? Because Tesla is still early in ramping its Model 3 production, and this is significantly impacting the company's overall gross margin. If you take a look at this, Tesla produced its lowest gross margin ever in Q3 2017, all the way back until 2012 when they just started ramping the Model S, and then in Q4 the gross margins got even worse. This is because the Model 3 production ramp is requiring them to invest a bunch of money in equipment up front, and that is hitting their cost of goods sold and making their gross margins look really, really weak. I'm hoping that in the next coming quarters we've already seen the bottom and they can start to recover as Model 3 production improves. But the most important thing to note of this is that hurting gross margins are what's driving Tesla's massive operating losses. But another way to look at this, Tesla is able to grow revenue like crazy. I mean, they are losing a ton of money, but they are investing and it's paying off in terms of record sales. These are their sales numbers on a quarterly basis going all the way back to 2013. And as you can see, the track record has been phenomenal. And in terms of revenue per share, this is a number I like to look at because it factors in dilution, Tesla selling stock to fund the company. You can see that they've been able to hit revenue per share of $71 in 2017. You know, this is way up from 49 in 2016. I mean, the growth here has been phenomenal. I think this compounding revenue per share number is what most investors are watching and is what is indicating Tesla is growing value on a per share basis. Another thing, the energy business has been on fire recently. Now, revenue was down a little bit in Q4, but it's important to remember that the sun shines less in the winter. Therefore, the revenue from SolarCity's solar systems decreases dramatically. In Q4, it's seasonally weak, but they should have had a strong quarter with batteries, so we didn't get too much clarity on there. It is interesting to note that it was still the second highest quarter ever for Tesla Energy, up massively year over year. Will be really interesting to see how that pans out next year. Couple tidbits from the letter. They're still on track to hit the 2,500 units per week of the Model 3 by the end of Q1 and 5,000 by the end of Q2. This is the most important number to watch for Tesla because the Model 3 is their make or break product. They need to produce a ton of these and they need to do it profitably. They have about 500,000 people waiting for this car. It's all about how fast they can ramp production and they are still on track. That was by far my biggest takeaway from the quarter. Beyond that, they guided that they will be generating positive operating income, which means their core business will be profitable once the Model 3 hits 5,000 units per week at some point in 2018. This is huge news. This is something that I've been modeling and speculating about, but to see Tesla put it in their quarterly letter, we are at the cusp of a major inflection point in the entire company's business where the core operating earnings are actually positive and they can use that to fund CapEx for things like the Semi, the Roadster, and that will allow them to grow without raising money from the capital markets. I think that is a huge step in the maturity of Tesla that we are getting so close to. Love it. They still had over $3 billion in cash. Cash utilization this quarter was really impressive, and they do have a bunch of CapEx going forward, so unclear how long that cash will last, but I thought this was a solid cushion. Customer deposits hit a record high of $853 million. This is up from about $650 the previous quarter. They probably got a $200 to $300 million injection from selling pre-orders for the Roadster and the Semi, and then they went through a little bit of that backlog by selling out of the Model 3. So I think that was part of the reason why Tesla's cash position was so strong. Also, they are still planning to do that self-driving coast-to-coast drive where a car goes from LA to New York, nobody's in the car, or maybe someone's in the car, but they're not touching it, all autonomous on freeways. That was supposed to happen by the end of 2017, but apparently it got delayed, but apparently it's still gonna happen by the end of this year. On the conference call, Elon said it could be 3 to 6 months away. Epic news. All right, let's get into the conference call. Elon Musk starts it off saying this was a tremendous year for Tesla. They launched their mass market car. They built the world's largest battery in Australia that's outperforming expectations. They unveiled the next generation Roadster, which is going to put to death any rumors that ICE cars can outperform electric vehicles. They unveiled the semi-truck, which opens up an entirely new addressable market for Tesla. They had record production and deliveries of the S and X, just a crazy growing up year for Tesla. He thanked all their suppliers, everybody working at Tesla. He said they're making really good progress on Model 3 production, still on track, and made a joke about how if he can send a Roadster into the asteroid belt, he thinks he can figure out Model 3 production. I'm with him. And he also pointed out they will do positive operating income on a sustained basis when they hit 5,000 units per week of the Model 3, maybe even GAAP profitable, but he said very maybe there, so I'm guessing no. But that's huge news. Like, once again, Elon Musk hammering home the inflection point in Tesla's business model where they start producing cash from core operations is so close. Q&A. First question, Deutsche Bank. Congrats on the rocket launch. There was a lot of those. Can we get a little bit more color on Model 3 production? What are the challenges? Elon says, look, I'll give you an update, but don't look too much into it because who knows what'll happen. Threw out some Churchill quote about you like hot dogs, but you don't want to see how they're made. Then basically there's 4 module zones of production for the batteries for Model 3. 2 of those were outsourced to suppliers who totally dropped the ball. Tesla's had to build those out themselves. That was an 18-month development cycle. They crammed into 6 or 9 months and just got shit done. This was the production hell. Design is nearing completion for those modules 1 and 2. They work with the Groman engineering team. So that is really impressive to me. And I actually had an idea here, which is the module cell production, which Elon said shouldn't have been a headache, they weren't paying enough attention to, is what's holding up the Model 3. It sounds like that's the production of those 2170 battery cells, which are more efficient, which I've also been speculating will be upgraded to the Model S and X in no time. And now I think we have a concrete reason why they haven't done it, because they can't figure out how to build enough of them yet. They're still trying to put them all in the Model 3. They don't have any excess to put in the Model S or X. My guess is once they figure out and ramp production of Model 3, we see these 2170 battery cells go into the S and X. JB also adds in a lot of hype about producing things by hand. Not the case at all. All of this is pretty much automated and getting there. Elon Musk makes a joke saying this is not an artisanal handmade product. Thought that was hilarious. Also says it could be worth providing a tour to investors eventually so they can see what's actually going down. I would love to go. Sign me up, Elon. And they throw in one more comment, which is these automated lines from Groman that are coming in have already been proving and are up and running and working in Germany. They just have to be deassembled, shipped over the country, put back together in the Tesla factory, and then they can get all this module situation sorted out and ramp production to 2,000 or 2,500 units per week. Adam Jonas, one of my favorite analysts from Morgan Stanley, comes in. Also adds a congrats about the Falcon landing. A little bit of brown nosing here. He was like, twin Falcon landing was probably the sickest thing we've ever seen. Like, okay, we get it, Adam Jonas. You love Elon Musk. So do we all. Anyway, he said that operating cash flow, he's wondering about whether operating cash flow could exceed CapEx when they start to hit around 5,000 units per week. Deepak says no. Follow-up about Elon's stock plan. Do you see a successor as CEO when you go to the chief product officer as someone inside the company or outside the company? Elon basically says, look, like we haven't even started to search for the inside or outside CEO. I'm still going to be CEO for the time being, but if there is someone spectacular inside or outside the company, they will be CEO. Then I can focus on product development and engineering, which is my bread and butter. Baird comes in with the next question. How do we connect today's production to getting a million units per year by 2020? The target's still on track. Is the Model Y going to bring it there? And then Elon says, yes, we will be making CapEx investments required to build out Model Y production in Q3 or Q4. We're going to make this way easier to manufacture the Model 3. We learned a ton, and I still think we will be able to get to 1 million units per year by 2020 selling the Model Y. So Tesla, a company that only sold 103,000 cars in 2017, is still thinking they can 10x production to about 1 million by 2020. I'm hoping that could happen, not sure, but Baird asked about the Tesla Semi. What's the potential here? What's the run rate gonna look like in 2 to 4 years? I couldn't hear all of this question, but Elon does guide that, like, look, at Tesla, our goal is to grow revenue by 50% per year on average. That's really hard for a company that's manufacturing such complex products at scale. We're still gonna do it, and we're gonna hit that target. And the competitive strength of Tesla, he adds, is not actually in producing the cars. It's in producing the batteries that are most efficient at the cheapest price. And he keeps going back to this thing about, we're going to productize the factory. This is a lesson that he claims is apparent in history. The Model T was not the breakthrough. He calls something river root the breakthrough, which I guess is the factory. So even Henry Ford and the Model T even had this mentality of, you got to design the machine that makes the machine, and that's Tesla's vision, and that's going to be why they have a competitive advantage. Goldman Sachs comes in. Okay, so your autonomous vehicle strategy, you're not using LiDAR. What are other competitors who are using LiDAR missing? What's the point here? Elon Musk goes, okay, actually, we don't just have cameras and forward radar. We also have ultrasonic near field something. I don't know. Honestly, I'm not even going to get into this because this was really complicated. Elon went into like engineering mode and said, pretty much, I'm certain we don't need it. I could be wrong and I could look like a fool, but I'm pretty sure that all these other companies are going to find it really difficult to actually implement this. In my view, it is the crux that will drive companies to a local maximum that will be very difficult to get out of. Not sure what Elon's saying here, but pretty much he doubles down that they won't need LiDAR for full self-driving. Goldman, can we talk about the trajectory of Model S and X margins? They were supposed to improve, but they took a hit, still around 20%. Deepak says, look, we're feeling really good about these margins, combination of variety of things, larger batteries, higher options, increasingly streamlined manufacturing, and us just getting more and more efficient at building these cars is going to allow us to hit our gross margin targets. Elon says something he probably definitely should not have said. Our internal plan calls for 30 to 32% cash gross margin on S and X, 20 to 25% GAAP gross margin on S and X by the end of this year. Model 3 will be closely behind. And then Deepak says, wait, those are just internal targets. We probably might miss them. Love it when Elon tells us stuff he's not supposed to. Nomura, I actually like this guy. He's a very bullish analyst, has some awesome points. So he asks, sounds like from the letter, you could do more with the S and X in 2018, but constrained from these 18, 16, 50, whatever Panasonic cells, what will it take to get these new Model 3 2170 cells into the Model S and X? JB said, look, we contemplated getting more packs from Panasonic of the 18, 16, 50 or whatever, but that would require so much more work because it's not just more packs that we need, we'd actually have to build out a whole separate manufacturing line to increase production as well. We weren't as confident in that, so we didn't make that investment, and they leave it pretty vague about whether the 2170 cells will make it into the Model S or X. I bet they will. Then there was some question about the cross-country trip. Elon says, look, we could have done the self-driving trip coast to coast. It would require a ton of extra code to game the system, not really working. I'm super excited about the progress we're making. Remember AlphaGo, the Google program that was so good at the game? They were as good as a normal Go player at first, then they were about as good as the world's best, and then all of a sudden they were the best in the world. These improvements in autonomous technology go by leaps and bounds once you get the ball rolling. He thinks that's what's going to happen with self-driving, and then goes on to add, timing-wise, I think we're going to do the self-driving trip across country in about 3 to 6 months. And then the follow-up is, will that be available to customers? Elon says, yes, that will be. So not exactly sure what that means, but it sounds like a huge autopilot upgrade is going to be launched in 3 to 6 months, and they're going to do it with the fanfare of driving the self-driving Tesla across the country to promote it. I'm stoked for that. JP Morgan, next question. As you put solutions in place one by one to unclog production bottlenecks, is the ultimate solution more or less expensive than you originated? Do you expect gross margins to be any different than when you started building the Model 3? Elon goes, look, honestly, I think we can exceed the gross margin targets we laid out. Of course he said that. Follow-up, operating income is going to be positive. What about free cash flow? Elon says, look, we could be producing positive free cash flow in Q3, but we're not gonna because we need to invest in battery capacity to build more batteries because we have such demand for those. The semi-truck, Model Y, like there's just so much things we need to invest in to grow that once Tesla starts making positive operating income, they're not gonna let it drop to the bottom line. They're gonna invest. This is exactly what Amazon does. This is exactly what we've been expecting. Kind of a rookie question from the analyst if you ask me. Anyway, Elon also goes to point out that in normal car factories, they're good at manufacturing, but one car gets made every 25 seconds, and that's assuming they're moving about 0.2 meters a second, which is slower than grandma with a walker can walk. And he says we should be at jogging speed. Eventually, companies should be worried about the aerodynamic drag in their factories because these production lines could be moving at 30 to 40 kilometers per hour. So basically, Elon's saying that Tesla's production capacity and scale is going to dwarf anything we've seen from the legacy auto companies. I hope he's right. Bernstein, CapEx for 2018 actually supposed to be higher than 2017. Walk us through that. What's going to be the spending? Deepak says, look, we still have a lot of Model 3 CapEx to spend, then we have massive CapEx for energy products, as well as the Model Y, as well as the Semi, just too many things to invest in. It makes good business sense to tackle these opportunities with capital. Elon adds that with the Model Y, to make $1 million per year, they can improve their CapEx ratio by a factor of 2 to 1 from Model 3. So the same amount of CapEx it took to build 500,000 Model 3s per year, they can use that same amount of CapEx to build 1 million Model Y per year, continually improving, continually getting more efficient. Bernstein with the follow-up saying, look, gross margins on the Model 3 were supposed to be break even this quarter, but then you push that back, and now you're saying they're going to be at a loss next quarter too. When are they going to get positive? Seems like you're behind track. Deepak and Elon are basically saying, look, like, we were planning a much faster Model 3 ramp, of course, 6 months ago, and based on that ramp, we were assuming positive gross margins, but now the ramp's more gradual. It's still going to get to that positive gross margins when we hit 5,000 units per week. It's just taking us longer to get to 5,000 per week, so that's why the gross margins are still low. Jeffries, question about the truck. Something about whether they're going to integrate supercapacitors in the truck technology to be able to handle the batteries. Elon's basic answer is like, no, we don't need that. Lithium-ion technology is amazing. Barclays, any more roadblocks that you can see in building the machine to get the machine? Can you talk about more perspective from a culture or managerial process standard? Like, what is it like at the Gigafactory? And then says something about how Toyota could launch a new product in 3 to 4 months, kind of indicating that Tesla's been dropping the ball, taking way too much time. Of course, Elon's first comment doesn't even answer the question, is saying Toyota takes way longer to develop a product than 3 to 4 months, so they get into a back and forth about that. But basically, they never even answer the question. Barclays asks a follow-up about what are the differences in how you manage the factory versus other companies, and they're just saying, look, like, our factory we look at as a vertically integrated product. It's the machine that makes the machine. Our factory is literally thought of as a product in itself. Then they have one of their other VPs hop on the call saying that an iPad is simpler to manufacture than our center screen. These are incredibly complex products. I thought that was interesting. And then at the end of the question, Elon says John McNeil, who heads up sales and service, will be leaving the company. We wish him well, yada, yada, yada. And all the new sales and service people are reporting to me directly. We're not even refilling that role. Bank of America, good afternoon. Okay, shockingly want to follow up on Model 3 production. This was just an worst question of the conference call award. Bank of America steals it here. Good afternoon, want to follow up on Model 3 production. Do you have enough experience producing the Model 3 that once you solve your initial problems, there won't be more problems? Just a really vague question about whether they're going to have another delay. And then Elon says basically look, once we figure this module things out, we're pretty much good to go. Other than this other part, whereas we have this whole automated system that stores parts and then moves them from the second floor of the factory up to the first floor of the factory. That's all done by automated robots, and that will be the next thing to work out after the module production, but they think they can do it. Eventually, they think they can squeeze out 600,000 units per year from the Fremont factory, 100,000 Model S and X, 500,000 Model 3, and eventually Elon even says, actually, if we really squeeze it out, we can do 600,000 Model 3, 100,000 Model S and X, so 700,000 just from the Fremont factory. And he's even made this one funny comment about how they have a factory that makes their seats just a couple miles away, and they have all these trucks going back and forth, bringing seats to the Fremont factory, and they're literally constrained by how many trucks can dock at once to drop off seats. So they're considering partnering with the Boring Company, you guessed it, to build a tunnel to transport goods in between these two factories. Of course, only Tesla would scheme on this. Then Bank of America follow-up, strong working capital cash flow this quarter. Is this repeatable due to customer deposits, ZEV influx? Deepak says, okay, well, we got rid of a bunch of Model S and X inventory. This improved cash flow dramatically. Also, customer deposits are non-repeatable. Duh, it was the Semi and Roadster event. They can't do that every quarter. And then cash coming in from Model 3, though, will be repeatable. So it sounds like, sure, this quarter was kind of an anomaly in how efficient they were able to spend their cash, but going forward, if Model 3 ramps, Tesla's going to be in a much better shape with its cash position. Last question on the call, Consumer Edge, sort of asking, will Tesla be able to make more money from its cars when consumers upgrade to autopilot and enhanced autopilot and fully self-driving features via over-the-air software updates, which cost Tesla nothing? Tesla was saying yes, this could be an incremental revenue opportunity for us. Then he keeps showing them on what the actual upgrade percentage is, and Tesla's like, look, basically no one's upgrading that much because they would be upgrading for fully self-driving. The cars can't do that yet. So when we roll that out, we expect people to upgrade, but for now, they won't. Oh, and then they also say that every car with Autopilot 2, which launched in October 2016, will be able to do fully self-driving and be capable of getting these over-the-air software updates. The only thing is, and they mentioned this before, the computer on board Autopilot 2 cars may be not good enough to meet regulators' requirements. The way they say this is that yes, Autopilot 2 hardware will be better than a human driver, but regulators may require it to be 5 times better than a human driver to actually allow you to do self-driving. If that's the case, they would probably need to swap out the computer. It would only be a minor expense, but that could be on the pipeline. And Elon says eventually they want to have a hybrid of Uber and Airbnb where you can opt in and have your autonomous car join a network like ride sharing networks, and this is the Tesla network that we've been hearing about. Elon calls this a significant opportunity. So I mean, once Tesla figures out their self-driving, there could be so many, the Tesla network where you can literally press a button on the app and have your Tesla drive around, picking people up, giving people rides, making you money for nothing while you don't have to do anything, is a crazy mind-boggling future that will revolutionize all of transport. That's still on the table, a couple years away, but thought it was interesting that Elon referenced it on the call and called it a hybrid of Uber and Airbnb. Anyway, my final thoughts on the quarter were this was a very impressive period for Tesla. They're just going through Model 3 production hell. I think this is the worst gross margins are ever going to be for the company. They need to improve these dramatically because they're burning so much money right now. I was personally a little bit disappointed that their overall gross margins went down from last quarter when they were already super low. I'm hoping that they can reverse this trend soon. And I mean, the guidance of positive operating income when they hit 5,000 Model 3s per week is huge. I think this was by far the biggest takeaway from the quarter. That's a huge, bold claim from Tesla. I was kind of modeling that, but was I actually expecting them to say that in the letter? No. And they did. Overall, taking a step back, a make or break year for Tesla. They need to deliver Model 3. It needs to be a blockbuster. It needs to hit their gross margin target of 25% when they ramp. But I think they can do it. And if they can do it, it's going to be a game changer. Here's a quick sneak peek at what my financial expectations are for 2018. I'm guessing they can more than double revenue to $24.5 billion, produce $5.5 billion in gross profit, and have a positive operating income from the year of $0.1 billion. This is going to be a game-changing, transformative year for Tesla, where if they can produce positive cash flow from operations, they will prove all the skeptics wrong. I am so excited for this year. I'm gonna make another video updating my whole Tesla model so we can get more in depth in this later. Anyway, this is my Tesla Q4 2017 earnings analysis. I hope you guys enjoyed it. I would love to know your ideas, comments, feedback, questions, any schemes you had from the call. Leave it in the comments below. This is Hyperchange. I'll see you guys next time.